Although trading is closed on January 29th, 2020, we'll go over our calls. Before we go over the calls, anyone who wants to get my books on the cheap has a day and a half to do that. Don't forget, it's only open till the end of January, and the publisher is in the United Kingdom, so depending on your time zone, there isn't a lot of time left if you want to get the discount. Okay, well, we called for the pattern with the early low, with the early high, and that's what this is. You can read it either way, but I think it's the one with the early high, and that tomorrow's pattern's going to have the early low. We had the FOMC announcement. Typically there's a three-leg whipsaw. First leg was down, second one up, third one down, each leg bigger than the last. First one was down. That tends to tell you the structure of the next big move. And this price tends to be resistance, as is this. There's an optional target for tomorrow. 95% chance it'll print, but it's really only about a handle under where we closed, and there's support under this number, so you can't really trade that. During the day, here was a buy signal in the afternoon. Target printed immediately. You don't have to stop there. And that worked. But what's really significant is early on, right from the beginning, MEJT said this rally was not for keeps. Their price would return to this line, find support there, and that's just what happens. Now it tells us 95% chance we undercut this line tomorrow. Here's what we said. We needed to have a gap over yesterday's thing to continue the rally. We had the gap. We did trade higher, but didn't close there. I'm still impressed by this volume spike. Usually you'll get more of a recovery in just a day. And even though today's action, which was hitting, which was gapping up, hitting a higher high and closing under both highs, even though that's negative, I'm still suspicious of saying this recovery's over because of that volume spike. However, we did rally right into this light blue trend line and find resistance there. So unless we gap over that line tomorrow, which I'm not predicting one way or the other, I expect that line, which is basically today's high, to hold in tomorrow's trading, again, assuming we don't gap over it. I'm not convinced this recovery is over, but once some prior lows start to fall, that's when we should get a more sizable drop. Right now, we're still in the Fibonacci support area. Could all change tomorrow. Thursday's pattern has the early low. Doesn't mean you won't gap up. If you don't drop big early, tends to be a positive day, not a guarantee, but a tendency. Tends to have a high in the final hour of trading, but if you do drop a big early, more weakness usually follows. Gap to a new high, hit a higher high, close under both of them. It's negative. Either we overtake those highs promptly, or we should see lower prices. There's a lower target, but none of that requires us to have a lower close. 3 days of rally, we couldn't invalidate the drop from the high. Invalidation would be closing over at least the lows and preferably this high. So I think this high is going to hold, and this rally attempts will fail at some point. But until you undercut these lows, you can't be certain that I'm right. Tomorrow's pattern has the early low. If we don't drop big early, there should be a recovery. If we do drop big early, there's at least the possibility that this 3 days of rally is all we're going to get, and that's today's call.